Hey guys, it's Carter, and today we're looking at the SPY, the S&P tracking ETF that I use to trade the S&P. All right, we're trading at 595 here, and we're in this upsloping parallel channel. I want to show you the next targets that I have on the S&P. This is actually going to be the target that I said we could potentially top at. So this is a really important level to watch. I want to highlight the short-term levels in this video and also the long-term threats as well. All right, join me in this video. However, this is not financial advice. Please remember that. So here on the SPY, let me delete this. We've been grinding higher. Ever since this bottom here in October 2022, we have been on a steady grind to the upside that I think is approaching its end here. Why do I think that? You can see the bearish divergence we've been forming since the start of 2024 on the weekly chart. Now, bearish divergence is something that gets factored in over time. This is not something that affects today or tomorrow. So upside is going to remain likely as long as the price action tends to favor it. And right now we see no reversal signals in price action that are overwhelmingly powerful. So it's likely we are going to continue to grind higher in the coming weeks and months. And I think the top of the parallel channel here, sitting at around 625 in December, will be our next target. So we're at 595 right now. 625 is approximately 5% more to the upside. So 5% to the upside is my minimum target for the S&P. And we're going to have to see price action, how it reacts there. That could be a huge level to watch. So let me be clear. I am a short-term bull on the S&P. I'm going to go over more short-term analysis in a moment, show you the level to watch in terms of risk. However, in the long term, in the coming years, I'm quite bearish on the S&P. I think we could quite handedly break to the downside because this channel is upsloping. It favors a break to the downside and possibly test this support level down here in 2026 or 2027. This would be a monster drop in the S&P. So a move down to retest that support level, if we hit the top of the channel here at around 625, would be around a 44% drop at least. So that's a huge move to the downside that I'm expecting to occur in 2026 and 2027 and possibly start in 2025. And we can even add more confluence to that level here by running a trend line in between these major pivots here. We got up to it here, took a huge dive, struggled at this level before breaking it to the upside, came back to this level before we absolutely exploded. So this level here, there's a lot of confluence around the 350 to 370 level on the SPY. So make no mistake, I'm bullish in the short term. I'm about to show you the level of risk to watch in the short term. However, there could be a move that is about to come in 2025 that will eventually take us back down 40%. So, although I am quite bullish for a vertical looking move in the short term, I believe 2025, the year as a whole, will look more like distribution than anything else. So meaning sideways at the top of the market like this, maybe floating up. So I think 2025 for at least the first half is going to be more of a distribution phase than an explosive move to the upside. I see the explosive move to the upside occurring now or the start of 2025. So 2025 as a whole for the market, I'm expecting to be distribution at the top, and then the later parts of 2025 could see a move down like this. Or that could even begin in 2026. So this is the type of move I expect in the next couple of years to play out here. So as promised, I'm going to show you the level of risk to watch in the short term. And I'm also going to tell you that I am on the sidelines right now of the S&P. I don't think there's a good trade to be made unless we fall into this level of support. So although I'm bullish on the S&P to go on a bit of a rally into the end of the year, I am not seeing a major swing trade opportunity because the risk to reward ratio is not very good at the moment. So if you remember the upside I said on the weekly chart, it's approximately 5% to the upside. And if we were to drop into our support, it would be about 5% to the downside. So a 1-to-1 is not really anything I'm interested in. So in the short term, it is possible that we could dip into this support region between 565 and 568. If we did that, this level would need to hold. This level is the level of risk to watch. So 565 to 568 is the level we need to hold in the short term to keep our hopes and dreams of heading to 625 in December and January as highly probable. So if we drop this level at 565, it opens the door to 10% of downside. However, if we drop into this level around 565 to 568, I'm a buyer looking for a move to the upside. So if we drop into this range, I'm a buyer. If we drop this range and head lower, then I'm out of that position because I think we dropped 10% pretty easily. All right, so we're now looking at the 3-month chart of the SPY, and you can clearly see that this 5-wave move is close to completion. And the last time we had a 5-wave move complete, approximately 10 years of a long ABC. And that move, I said, that could take us down to around 350, could be the A. We'd then see a 3 to 4 year rally, followed by another 40-50% crash. So that's what I kind of see as likely in the next 10 years, according to the facts I'm seeing in the charts, and if we're dropping the moving averages that I showed you on the Halloween special. If you haven't seen that video, go watch it because I think it clearly shows what I think is likely to occur in the coming 10 years if we drop a certain moving average. And I explain how these 3 hits on the RSI have been linked to a move of 50% downside occurring. So we need to watch this because this 3-hit rule is potentially about to play out and play out soon because this is the 3-month chart and we're at the resistance level. So if we start to see distribution at the start of 2025, we need to watch out. That could be a major warning sign, and I don't believe people are prepared enough. All right, that's all I have in this video. Stay safe in the stock market.